the 6th of June 2025. Right, today I want to discuss this topic, a new milestone in crypto's mainstream integration. Now, JPMorgan Chase will soon allow trading and wealth management clients to use shares of spot Bitcoin ETFs like BlackRock's iShares Bitcoin Trust, better known as IBIT, as collateral for loans. The bank also plans to factor crypto holdings into clients' liquidity and net worth calculations, treating them similarly to traditional securities. Now, this signals a major shift in attitude by the largest US bank, reflecting how rising clients' demand and broader market acceptance have pushed crypto further into the mainstream. Now, for years, large banks remain cautious about crypto due to volatility and regulatory risk. Now, JP Morgan is recognizing that ignoring crypto could mean falling behind in a rapidly evolving financial landscape. Okay, so this is definitely a big change so far. Now, the Bitcoin ETFs have so far gained parity with traditional assets. So by accepting Bitcoin ETFs as collateral, JP Morgan effectively elevates these crypto-linked products to the status of mainstream financial instruments. Now, spot Bitcoin ETFs allow investors to gain exposure to Bitcoin without holding the asset directly, and treating them as eligible collateral brings them into the fold of conventional banking. Now, this move provides clients with more flexibility, allowing them to borrow against Bitcoin ETF holdings without selling their positions. Now, given that US listed spot Bitcoin ETFs now manages over $128 billion in assets, their acceptance is grounded in growing liquidity, investors' demand, and the increasing role they play in diversified portfolios. So, this is definitely something what I call a huge change, in JP Morgan, because it's now something like Bitcoin is a fraud to go at it. That's the thought. Now, this pivot is particularly noteworthy given that the CEO, JP Morgan CEO Jamie Dimon's long-standing opposition to crypto. He once labeled Bitcoin a fraud and warned against its use in criminal activity. However, under increasing client pressure and industry momentum, Dimon has adopted a more pragmatic approach. All right. So, in recent months, he acknowledged that while he still personally dislikes Bitcoin, the bank will allow clients to buy and use it as they choose. Now, this shift highlights a broader trend in traditional finance where institutions are adapting to client interests, even if their executive remains skeptical. Now, JP Morgan's decision to support Bitcoin ETFs reflect a practical response to market realities rather than philosophical endorsements. Okay? So he's just saying that, I still don't agree with it, but hey, if you want to spend your money this way, it's up to you, right? So so far, the changing political and regulatory winds is fueling adoption. The timing of JP Morgan's move aligns with a significant political shift. With Donald Trump back in office, the regulatory environment for crypto has become more favorable. His administration quickly reversed restrictive rules and signaled a more supportive stance towards digital assets. Key regulatory bodies like the SEC have also relented, allowing the launch of spot Bitcoin ETFs in early 2024. This policy shift has opened the door for banks to engage with crypto without fear or backlash. Now, combined with the success of Bitcoin ETFs, these changes have encouraged traditional finance institutions to enter the space more aggressively. Yeah, we have seen that so far. So, right? So definitely there are ripple effects and the impact on the financial industry and the crypto markets. Now, JP Morgan's decision could influence other financial institutions to follow suit. As the largest bank in the US, its adoption of Bitcoin ETFs collateral assets sets a precedent that smaller banks and asset managers may feel compelled to match. Now, this could accelerate the institutionalization of crypto, increasing its legitimacy and role in global finance. For the crypto market, the inclusion of Bitcoin in mainstream lending and wealth management practices could lead to a broader participation, high liquidity, and more stable investment inflows. It also positions Bitcoin as a financial asset that can be used not only for speculation, but also for credit access and portfolio planning. Now, so end of the day is about balancing benefits and risks for investors and banks. Okay. So the integration of Bitcoin ETFs into lending and wealth management comes with both advantages and risks. Now, investors gain liquidity without selling their crypto positions, and banks gain access to a growing asset class and new revenue opportunities. However, if you are new to crypto, just to let you know, volatility is a main issue in crypto, and that remains a key concern. Now, sharp drops in Bitcoin prices could trigger margin calls or cause loans to be under collateralized. Okay. Regulatory shift in the future could also reintroduce restrictions or change how these assets are treated. Additionally, banks must be cautious not to overextend credits in a market known for rapid booms and busts. So responsible implementation will be critical to ensuring this new access to crypto enhances rather than threatens financial stability. So as a conclusion, JPMorgan's move to accept Bitcoin ETFs as collateral represents a turning point for digital assets in traditional finance. It reflects the convergence of regulatory shifts, client demand, and competitive pressure. While risk remains, the development signals broader acceptance and could serve as a catalyst for other institutions to integrate crypto into their offerings. As crypto becomes more embedded in financial systems, it will require balance, oversight, thoughtful risk management, and continued adaptation from both investors and institutions alike. So this is definitely, like I said, this is definitely good news, but it's not a news to say for you just to buy Bitcoin blindly, but at least it is something for you to ponder and say, hey, it's slowly moving into the mainstream. It will act as a mainstream, but do take note, this is something good, but we don't just jump in blindly. Okay. Volatility is still very high. As you can see, yesterday alone, right, you had Bitcoin dropping from a high of rough almost 106,000 to a low of almost 100,000. So it's like a 5,000 plus US dollars, drop in just a single day. This is something very, very common in crypto for Bitcoin. So you still need to be very, very careful dealing with this one. And I think there's a trader, his trades would have been liquidated if he did not added more into his trading account. So probably about 100 over million US dollars wipe out just like that. So yeah, these are the things that traders need to be very careful when they deal with Bitcoin. And these are the concerns uh, and also the risks banks and investors have to deal with uh, when they touch crypto. Okay, so with that, that's the report for today.